Yeah. Good morning, everybody in the room, and welcome to those online. Good morning.
Good morning.
Could we receive any apologies, please?
Yes, we've had apologies from Suzanne Stolberg, from Tim Southern, and David Tweddle this morning.
Okay, thank you very much. If we look at the minutes, we need to note the minutes of the Governance Subcommittee, which was held on the 6th of August 2025. You have a copy of that. Could we note those minutes? Well,
Sorry, just a minor amendment. E keeps appearing on the end of my name, so just for future, can we
okay.
have Clark without any? I know it's only a minor criticism, so
Thanks very much.
I'll pick that up, and I'm happy to propose those.
Okay, thank you. Anybody to second? Yeah. Okay, thank you very much. Noted. And can we confirm the minutes of the meeting held on the 24th of September 2025, please? Okay, thank you very much. Confirmed. Okay, moving on to the announcements. So in the event of a fire, everyone should exit the building by the nearest exit and walk to the fire assembly point, which is situated in the car park next to the central walkway. Okay. So we live stream our meetings and make a recording of the meeting. So please ensure that your microphone is switched on when speaking, as this is how audio is recorded. The recordings will be retained for a period of 12 months before being deleted and are available via YouTube. Please be aware that photographs taken from the live stream may be used in press reports. If any members of the public, sorry, we don't have any members of the public here today. Okay. Thank you. Do you need to sign? Yeah. Helen, I'm not sure whether he can hear us on the screen.
I can hear everyone now.
You can. Something flashed up on my laptop.
Yeah, initially I think it was mute. But...
Thank you very much. Do we have any declarations of interest? Members should declare any registrable interests of disclosable pecuniary interests and state the nature of those interests so it can be recorded in the minutes. These interests are described in the Code of Conduct, which we adopted by the authority on the 20th of October 2021. Declarations, thank you. So item number 5, questions. Any questions? Any questions raised under Standing Order 14.2 relating to the business of the committee? And public participation? Thank you very much. So moving on to item 7, the risk management strategy. Could I hand to Ben, please? Thank you.
Yeah, thank you, Chair. Okay, so risk management strategy. We review our risk management strategy annually. Our strategy explains our appetite for risks, as well as how we identify, mitigate, and manage our most significant risks. So the strategy includes a few elements, including our risk appetite statement for the authority. So this explains the extent of our willingness to accept considered risks and the level of risk we tolerate in different situations and areas of work. We identified 9 key areas of work, for example, areas like financial governance or cyber risks, and then we show the authority's appetite for risks in those areas. The risk appetite is stated as either low, medium or high for each of those work areas, with an explanation as to why that level's been chosen. Our risk management strategy also includes our risk appetite map, and this shows the relationship between our appetite for risks and the range of tolerable risk scores that we would expect to see in those areas. In areas where we have a lower risk appetite, tolerable risk scores tend to be lower. So I can confirm that following SLT review, there's no proposed changes to the risk appetite map this year. However, there are some minor changes to the risk management strategy overall. To summarise those, on page 5, we have updated the description of our risks associated with our commercial strategy to reflect that the strategy is delivered through the commercial strategy board. On page 6, there's a few changes following the changes we made to the business plan this year. So our business plan changed in this year from a 3-year to a 1-year plan, and our organisational strategy has been updated to show the reviewed priorities for the authority. On page 14, our programme boards, we have added a responsibility to identify risks that require escalation to exec board. So minor changes this year, and those are the ones that's been summarised. And I invite any questions from members.
Go on. So I'm guessing the actual level of risk is determined or suggested at first by the head of service, and then it goes to the executive board, or does it always go to the executive board, or does it just get accepted?
It's exactly that. So head of service initially will review it, and then it goes to SLT and we'll review it as a group.
So it's like a secondary
Yeah.
look over of it. Okay, thank you.
Okay, yeah. Yes, I was going to ask something like that. Thank you. Any? Yes, Will? Thank you.
Yeah, I probably should have picked this up already before now, but just looking at the risk appetite map, Appendix 1, I just wondered why staff recruitment and retention was, the thing that we would be happy to push above anything else.
Sorry, as in we have a high tolerance for staff recruitment and retention. Bear with me. Let me just go down. Sorry. Well. Sorry, bear with me. I'm just reading through the section. Sorry, I don't know. I suppose if you could come in and help me with that one.
Yep. So the idea really behind this is that because we have quite a challenging recruitment market in some areas, and we've struggled to recruit to various posts, it just means that our appetite for considering different ways of recruiting to some posts might be higher than it would otherwise. That's the reason for that. But actually the tolerable risk scores for our risks in that area tend to actually be quite low, but it just means we've got the ability to consider different ways of attracting staff just to try and fill our posts.
No, that's good. I appreciate you explaining that, because I was thinking just along the lines of retention and how corporate memory is quite, culture is quite important. So as long as we're doing what we can to retain what stuff we have.
Thank you. Any further questions? No. Okay. So the recommendation here is that we review and approve the authority's risk management strategy as shown in Annex 2 and subject to any amendments arising from today's meeting. So do we approve? Yes. Yes. Okay, thank you. Approved. Okay, so we're moving on to agenda item number 8, which is corporate and business plan risks update. And again, over to you, Ben.
Thank you, Chair. So we report our summary of key corporate and business plan risks twice a year. So this report is from our last update at the end of February. We had 9 corporate risks and 6 business plan risks that were being monitored in the risk database. So there was no risks at critical or high level and no risks with a current score of 10 or above, and there were no risks with a red status. So we had 5 risks at an amber status that were above tolerance levels. These were cyber risk and data security, external factors impacting the authority, development management enforcement, special area of conservation planning reviews, and World Heritage inscription. From the last update in September, only one risk, which is the cyber risk and data security, increased. This is due to we have internal training modules that feed through to all the staff. Our compliance of those modules went down, so we increased the risk in correlation with that. I'm working with the IT team to see how we can review to make those modules mandatory, so we can do a bit more enforcement to get that up, which should reduce the risk score. So we then had 4 risk statuses improve from the last update in September. That is the resource availability, the reputation management, the commercial strategy, and Brockhole. It's probably important to note that Brockhole has since been closed because we've obviously handed over the site on the 1st of April to Bewilderwood. At the end of each quarter, risk owners are asked to review their control mitigations and make sure they're in place and effective. This was last completed in December and all owners confirmed they were. And then finally, we have where we have significant risks, we include contingency plans. Only one risk meets that criteria, which is Greenside Mine. Contingency plans are all included in Annex 2. Thank you, Chair.
Okay, questions? Graham?
Yeah, just going on to Greenside Mine. In the 12 months since the last assessment, has anything actually changed on site with that?
Not that I'm aware of. I'm probably not the best person to be able to answer that, but we have all of the same mitigations in place and it's become business as usual. We have the same checks that's going on.
Thank you.
Mark?
Sorry, if it assists Graham, I'm not aware of anything either.
Okay, thank you, Jill.
Yes, thanks. Reputation management risks, the status is improved. I'm guessing that's because we think that the reputation is a bit better rather than our tolerance has increased.
It was increased because of a number of issues, Brockhole being one, and our work around that. So as the Brockhole lease has gone down, the reputational impact's reduced, and Sarah had a couple of factors that have been taken into account over the past sort of 6 months that's sort of leveled out, and she adjusts her scores to match.
Yeah, I totally agree with that. The parish engagement events as well probably help a bit.
Okay, thank you. Tiffany?
Yes, Graham got ahead of me because I always raised the point about Greenside Mine being slightly twitched about mines, but
Yeah.
So I was really pleased to hear that that's still being carefully looked at, and as far as we're aware, the situation remains unchanged. But it is obviously really important that we keep to manage that. I think the only other comment I'd make, there's not really much we can do about it at the moment, is the importance of recognising external factors impacting the authority. So when in brackets it says wider political and economic factors, they could prove to be increasingly significant. Just thinking about in particular the pressure on oil prices at the moment is just one immediate example.
Yes. Will?
Yeah, I think as already been said, it's good to see most of the risk exposure reducing, and certainly within the locality where I am, people seem quite content with Brockhole, and reputation management certainly improved with the parish meetings. The only other question is just how do we continue to improve the development management? I know that's been an issue for a while, and is that well enough resource to continue on that positive trajectory?
I think not to speak on behalf of Andrew Smith, but he seemed quite positive when he came and spoke to authority. I forget when it was, when he did his away hour presentation. March. Perfect. So Andrew came to authority in March, talking about enforcement and various different planning applications. He showed the trajectory going down and levelling off, so he seems relatively confident. I think there's some DCC members here who may be able to give more detailed answers, but I think that it's balancing in time, and hopefully we should see that reduce. Andrew's the first person that'll come forward if he needs more staff or if he needs different staffing models in place, and he seems quite content at the moment.
Yeah, there was a big backlog after COVID, and there was staffing issues, and I think we released some money at the Resources Committee to fund that, so it's fully staffed on the enforcement side now. So it's just knocking away. So I think this last year, finally getting on top of it. So it's all going the right way now after years of, big backlogs.
Yeah, thanks for that, Mark.
I think it's already also good to note we have really low attrition, really low turnover. We don't have much need of recruitment in that team, which is really positive and in a much different place than a lot of local authorities out there who rely quite heavily on agency. We don't have that problem.
So we were asked to consider, which we have done, and to note key corporate and business plan risks as have been summarised in Annex 1 and detailed in Annexes 2, 3 and 4. And we note. Yeah, thank you. Okay, thank you, Ben. So moving on to item number 9, accounting policies for the 2025-26 statement of accounts. I'll hand over to Serena. Thank you.
Thank you, Chair. Members, this is a report that is brought to Governance Committee each year, and it sets out the accounting policies that are used in the preparation of our statutory accounts. So in this instance, it relates to the 25-26 statement of accounts. The recommendation and ask today is that members approve the accounting policies for the statement of accounts for 25-26 as set out in Annex 1, and members delegate to the Section 151 officer the ability to amend the accounting policies if required. In terms of a little bit of context, the statement of accounts are prepared in accordance with the Code of Practice on Local Authority Accounting in the UK, which is usually shortened and referred to as the Code. In order for our statements of account to be compliant with the Code, members are required to approve the accounting policies that are used in their preparation. I'll just say that although approval by members is a requirement, the Code is quite prescriptive in terms of the accounting policies that should be used to underpin the statement of accounts. So in reality, there is limited discretion. Members are asked to note that there are 2 changes made to the accounting policies document set out in Annex 1. The first being a minor change to wording and has been made for completeness as opposed to it being an actual change in policy. The old wording referred to upward valuations and now refers to both upward and downward valuations. And that can be seen on row 5 on the table on page 3 of Annex 1. The second change has been necessary following a change to the code, which this year has introduced the use of indexation in relation to the valuation of property, plant and equipment held on the balance sheet. Prior to this change, the accounting policy stated that the authority would undertake annual formal valuations of any assets of high value. And they would be any assets that would result in a serious misstatement on the balance sheet if their valuations became outdated. The code now requires property, plant and equipment to be valued every 5 years with indexation applied in the intervening years. This change can be seen in the PPE section on page 13 of Annex 1 under paragraph 1, recognition and measurement. So in conclusion, the accounting policies contained in Annex 1 remain largely unchanged with only 2 changes, one being to clarify wording used and one being the result of the change in the code. Are there any questions? Any questions?
Yeah.
Will.
Yeah, just a minor point. Just looking at Annex 1, page 7, we're still referring to Cumbria County Council. Should that now be the combined authority?
Which page, sorry?
Annex 1, page 7, second line down.
Yes, Yes, thank you. It should.
Well, yeah, Mark.
Yeah, all looks quite standard. Just out of interest, what would the solar panel canopies be classed as? Building, plant, or do you have to write them off after 30 years? Or?
No, they form part of our capital expenditure this year, so they will be added to the asset register as a capitalised asset. No further questions? Thanks, Serena. So we're asked to approve the accounting policies for the statement of accounts for 2025-26 as set out in Annex 1. And also for us to delegate to the Section 151 officer the ability to amend the accounting policies if required. Agreed. Yeah. Great. Thank you very much. Thank you, Serena. Thank you. Okay, moving on to item number 10, which is the annual governance review for 25-26. Hand over to Pete.
Thank you, Chair. Yeah, so this is another sort of 25-26 year-end item. So similar to the accounting policies, every year we do a review of governance arrangements internally. As part of the statement of accounts, we have to include an annual governance statement, which the main purpose of it really is to set out how effective our internal controls and governance arrangements are. And if we conclude that there are weaknesses, to put an action plan together, which we then monitor in the subsequent year. So there are a few different strands to this process. So sitting at, I guess, the highest level, there's a best practice framework, which CIPFA, which is the Accounting Institute covering public sector bodies, issues. So that's a large sort of comprehensive document that would cover anything from, I guess, something of our size, possibly smaller, right up to the largest unitary. So you can imagine it's, you know, got all sorts in it. So that's kind of the top level. Then authorities are expected to develop their own local code of corporate governance, which effectively sets out their own governance arrangements that you would expect to not necessarily cover everything in the CIPFA framework, but the relevant bits to your particular organisation. So we have a local code of corporate governance, which forms part of the authority handbook. So part of that process that we do every year is to check whether the guidance has changed by CIPFA and whether anything has changed internally in terms of our local code of corporate governance. So there has been some additional guidance issued by CIPFA in year. So they, I think it's sort of post-COVID, there were maybe some weaknesses in some parts of the local authority sector. So they issued an addendum to say, right, well, just to clarify, we expect you to do these certain things when you're preparing your AGS and the new governance arrangements. So we were aware of this last year and we kind of reviewed the draft that CIPFA produced, and that didn't really generate any extra actions for us. I think we felt we were largely compliant with that already, but that review has been done against the final guidance that was issued, and I think we're satisfied it didn't really generate any extra actions for us. We've also been through our local code of corporate governance just to make sure, so things similar to as Will's sharp eye spotted, there are things in there where bodies' names might have changed, so things like executive board has become senior leadership team, some slight differences with partnership organisations. So just to make sure that local code does stay up to date. I mean, we haven't made any significant governance changes in years, so as you might expect. If you look in the report, there is a table to the changes that we've made on page 89 of the PDF pack, and the magnitude of the changes is along the lines of sort of typos and formatting. Largely, there aren't any fundamental changes in it, but as part of the process, we do review it every year. Then another key part of the process is making sure the actions that we identified last year have been implemented this year. So we have been monitoring those through Governance Committee. One of the annexes in the internal audit update that we bring every meeting was monitoring those actions. So of the ones that were raised last year, I think we concluded all of them were complete except the action around the data management. So that is going to get carried forward into the next action plan. And I think we've had sort of a number of discussions at committee about the findings of that internal audit review, which are still ongoing. I think we're happy that significant progress is being made to address the findings of internal audit and what we had recognised ourselves internally before that internal audit review was done. But the scale of, I guess, reviewing the Information Asset Register and sort of follow-on recommendations, that is still ongoing. Then I guess the other key bit, taking into account the framework, our local code of corporate governance, implementation of actions from last time, all of that kind of comes together with a few other key lines of evidence to produce the annual governance statement. So the draft annual governance statement, which will form part of the statement of accounts, and we'll ask Tiffany as chair and Gavin as CEO to sign the draft one in the statement. Essentially has a kind of high level summary, if you like, of the governance framework, but most of it, and the key purpose of it really is to say how effective has that governance framework been. So you see in section 4 of the annual governance statement, it kind of summarises the key lines of inquiry. So it's things like an absence of significant items coming through this meeting that we've had to address, such as fraud or major governance breaches. And then the other key bit is the internal audit assurance, which in part 2, Tessa from TIA will take us through the internal audit update and the head of internal audit opinion, and then obviously other things such as Grant Thornton's opinion on the last set of accounts and VFM opinion. So all of that kind of stuff we bring together to say, right, well, do we feel the governance arrangements are effective? And it's almost an absence of things saying is not effective, if that makes sense. And our conclusion is, yes, the governance arrangements are satisfactory. You will see that we have flagged a number of actions that will be carried forward for review next year. And essentially, so the data management one is going to get carried forward because we recognise that is important and it needs bringing to its conclusion. There was a VFM recommendation raised by Grant Thornton in the last set of accounts around financial forecasting and monitoring. So we've gone some way to addressing that already in our monitoring this year, but we've left that in until we're happy it's satisfied and Grant Thornton are happy it's satisfied as well. In addition, members will be aware that there are some governance amendments proposed for next year, so they don't really affect 25-26, but they are reasonably significant, impacting on Resources Committee and Park Strategy and Vision. So one of our recommendations is that we're going to need to do a post-implementation review on that at some point, probably during next year. In addition, we have also set up a conservation covenants board recently to support our work as a responsible body. So this is to do with nature finance. It's to help us as an authority sort of facilitate biodiversity net gain agreements and things of that nature. So that's relatively new. We've had the first meeting of that governance board has happened. It's expected that activity in that area is going to grow, but it is a fairly new thing. And obviously some of the agreements, if it's a biodiversity net gain, is tying the authority into a sort of 30-year commitment to sit in the middle of those agreements, nutrient neutrality, even longer, 80 years, possibly longer. So they are not large in financial terms, but in commitment terms, quite big. So just to make sure we've got adequate arrangements around that, we felt there's a need to do a review. Ben's already mentioned in the risk update around cyber, and again that'll come up later in the internal audit review on the cyber. So essentially there's an action to ensure that cyber training is adhered to, and that will apply to both officers and members. And then another sort of hot topic on the IT front is around the use of artificial intelligence. So there is an ongoing trial at the moment for staff where we are trying to develop a business case for where it might best be used, how it might help us. Because obviously there's a cost to the licenses, and it's a case of is there a business case there at the moment for AI? So as a kind of key tool, certainly for the future, in terms of us understanding how we might use it, are there efficiency gains, productivity gains that it could implement? Again, we felt that's kind of a really important thing that needs to have some commitment to reviewing. So I feel like I've sort of waffled on a little bit there, but yeah, basically in terms of the process and the outcome of the process, hopefully that sort of summarises it, but happy to take any detailed questions on any of that.
Well, just so you're not left stranded in the chair, let me just say I think this is I thought this is another really good report, and I think the reason for silence is because it's all very clear, and there probably aren't many things that we would sensibly comment upon. Interesting, you talk about AI. It was very topical. I was listening to something on the radio yesterday about a chief executive bot, and you can replicate yourself. I think, is it Bill Gates or somebody of that sort of ilk? I can't remember who it was who'd done it. I don't see us in the national park following that route just at the moment, but I thought it was an interesting example, flippancy aside, of just how AI is advancing and the slightly sort of unexpected, to me anyway, twists and turns it can take. So I think the authority is very wise to be looking at that, and it will be interesting to look back or look forward to sort of 5 or 10 years' time just to see what influence it does bring to bear.
Yes, indeed. Okay, so members, we're asked to approve the 25-26 local code of corporate governance set out in Annex 2. We approve. Yes, thank you. And members note progress in the delivery of actions from previous governance reviews in Annex 3. Thank you. And members approve the draft annual governance statement in Annex 4 and delegate to the Section 151 officer the authority to make changes in the light of governance committee comments and any subsequent findings from internal or external audit. Approve? Yeah, yes, thank you. Thank you very much. Okay, so we'll now move on to agenda item 11. The external audit plan 25-26, and again hand over to you, Pete.
Thanks, Chair. So I'll just do a very quick preamble. So members will be aware that obviously as part of the annual cycle, the audit of the accounts is a key activity, and in terms of you representing the authority as the delegated body to sign the accounts off, a key line of your assurance to sign those accounts off with the work of the external auditors and their audit findings report, which they'll bring later in the year. So a key part of that audit process is Grant Thornton coming and setting out what they're going to do when some of the assumptions that they've made around the risks and other statutory things that they have to disclose, such as the fees. So the report is presented in Annex 1, and I'm happy to say I think we're quite lucky. So we've got 3 external auditors with us today. We've got Liz, Ben and Matt. So I will hand over to our esteemed colleagues from GT to take you through the report. Thanks.
Thank you. I'm not sure many people would describe the 3 external auditors as lucky, so I'll say that was a win. I'll let Ben run through the report in a minute. I just wanted to give a quick update on on where we're up to, and also introduce Matt, because unfortunately this will be my last meeting as engagement lead, but you will be in the very capable hands of Matt for the remainder of the audit. So I've kind of brought it through to the planning and audit plan stage. Ben will carry on throughout, but that's why you've got multiple of us here today. So in terms of where we are up to, obviously we've done sufficient work to bring our plan, which is here today. We've done some early interim testing, so we're in a really strong position basically to get the audit completed on a timely basis, which we always have done. I just wanted to bring your attention to, in kind of the appendix to the report, there is a thing around backstop deadlines and a letter that we wrote. And the reason we're doing that, we're doing it with all our clients, is because although you have never been impacted by the backstop and hopefully never will be, the deadlines for those are being brought forward. So for 26-27, all audits will need to be completed by the end of November. So we're, as a trial run, effectively introducing that for this year to make sure we can do it as a firm. It's never been an issue with your audits, but there are some of our audits that run on beyond November. So our intention this year is to try and get all of our local government audits finished by the end of November. As I say, in your case, we're very well prepared for where we need to be, and absolutely no concerns at the moment about that. But I'll pass over to Ben to run you through the details of the report.
Thank you. I will take the report as read, but I'll just draw your attention to a few key points as always. So on page 130 of the pack is titled Instruction Headlines. This sets out details of significant risks we've identified and the sort of main areas of work we want to undertake. These are going to be management override controls. This is a standard risk in every audit plan you will ever see. We've got fraudulent transactions being included in the revenue cycle. This is specifically in relation to the commercial income. The valuation of your land, buildings and investment properties, and the valuation of your pension fund net balance. This is to do with their sensitivity to the underlying assumptions and having large impacts on those balances. Below that, we've detailed our materiality. This currently represents 2.5% of your prior year gross expenditure. What I will say is that we will revisit that assessment when we get your draft accounts, just to check that that figure remains appropriate, and if it needs updating, we will do. Like Liz says, we've largely completed our plan at this stage. We've actually done some early testing. We're in a very strong position, and then we're hoping to conduct our field work between July and September, so well in advance of November, hopefully. I will then quickly jump to page 139. This sets out our recommendations that we made in the prior year and management's progress against them. As Pete said earlier, management have already undertaken a lot of work. The reason these are all badges in progress is because as auditors, we're sceptical people. We need to see them in action. So we will feedback on those in our audit findings report, hopefully in September, about where those are up to in their implementation. And then the final thing I would just draw your attention to is on pages 141 to 144 of the pack, which is the value for money. Our planning work on that is largely completed as well. At this stage, we've not identified any risk of significant weakness to draw to your attention. Our intention will be to feedback alongside our audit findings report with our auditors' annual report in September on the concluded value for money work. Like Peter again said, there was one improvement recommendation made in the prior year, so we will touch base with management on that and see how that is going as well, and hopefully feedback on all of those things in September when we conclude. Those are the main bits I wanted to draw out. Happy to take any questions on any part of the report on anything I've just made. Thank you.
Mark?
Yeah, just understanding how accounting and auditing works still after all these years. Obviously, you've got to assume there's some significant risks, and one of the risks you've got to assume under ISA 240, a rebuttable presumed risk of fraudulent transactions. When you say you've rebutted a risk, does that mean you just don't look into it? For example, you rebutted the risk of fraud in revenue recognition, or does it mean you don't look into it quite as much as you would?
It's rebuttable in so much that what we do is we assess each of the streams of either expenditure or revenue at the authority and whether we think that there is a risk of fraudulent transactions in there. So what we can do is rebut it around fraud, but we still do significant amounts of work on those balances. It's just that that specific risk itself over the fraudulent transactions is rebutted under ISA 240.
So when you say rebut it, it means, I suppose I'm trying simple person's terms. Does it mean you don't look into it quite as much?
Yes. So it doesn't meet the scope of a significant risk, and a significant risk is one where we do additional audit work over and beyond what we normally do.
Right, I get it. So yeah, the activities that are done here aren't the sort that would necessarily have high risks of that area. Okay, thank you. I've noticed the audit fees have gone down slightly as well since last year.
There was, if you remember, there was
extra.
IFRS 16 as a new standard last year, so there was a little bit of extra cost incurred linked to that. We're not anticipating anything this year, but who knows? But obviously, if we are, we will bring it to, well, management and the committee's attention.
Thanks, Mark. Oh, thank you very much for your report and your work, and welcome to Matt. So if there aren't any other questions, the recommendation is for us to note the external audit plan covering the 25-26 financial year at Annex 1. Can we note? Noted. Thank you very much. Thank you. We move on to agenda item 12, which is the external audit questions of management 25-26. Peter.
Thank you, Chair. Yep. So this is sort of aligned to the audit plan in that, as part of Grant Thornton's assessment of risk and planning where to do significant amounts of work, they have asked us as the client to effectively make disclosures on a number of areas where we think there might be things that need considering, or where there have been particular changes in the year, or just to confirm that we feel we've got adequate arrangements in place. So that the sort of things that are covered, so there's general inquiries about key events that we feel need disclosing in year, fraud, which we've already touched on, laws and regulatory compliance, related parties, so going concern, and things around the accounting estimates. So this is a annual exercise which GT asked us to complete the disclosures in quite a level of detail. Similar to the logic of the AGS review, there haven't been a lot of changes to the governance framework in year. We haven't had a lot of instances, or any major instances, of fraud or lack of compliance, and there's no major changes in relation to related parties, no major significant issues in relation to going concern. And tying back to Serena's report on the accounting estimates, some changes in accounting estimates. So in terms of the things that we've sort of flagged to GT as areas that we think have changed in year and might potentially require a bit more of a detailed look at in terms of audit work. So yeah, the accounting policies, particularly around the indexation, we are anticipating, obviously Grant Thornton are fully aware that these are doing it. It's not we've gone off our own bat and decided to introduce indices. This is a national issue. The logic being to save time. Whether that actually comes to pass is we'll see how this year goes. So we've introduced the indices. Obviously, we've mentioned earlier in the meeting the letting of the Brockhole site. So whether that does have a significant impact on the value of that particular asset, I'm not sure. We're still in the middle of doing the asset valuations, but obviously it's a significant operational asset. So we flagged that. Obviously, GT were aware that we were in the process of leasing it, but obviously that has actually happened now, and as of the 1st of April, the site is leased. So again, it's not necessarily saying it will create a change in the value, but it's probably something they'll be interested in. And then the other element, again, is a fixed asset one, is around our woodlands. So they've previously been valued as investment properties, and certainly over the last 12 months with the employment of the woodlands officer and applying for woodland management grants, I think we felt that that doesn't really fit anymore. And again, there are certainly a material balance on the balance sheet around 8 million. So again, it felt like that was something that we needed to flag as a potentially significant change in classification, which might generate some extra questions. A lot of the other responses are very similar to last year in terms of our internal arrangements around fraud, our position ongoing concern, etc. So obviously we've supplied these answers already to GT, which they've reflected in their planning. But as a part of good practice is obviously we as officers, this is what we think. Hopefully it aligns with what you as those members charged with governance, it's consistent with what you've seen coming through this committee, but really this is just an opportunity to either query any of the stuff that's in it, flag any things that you think we as officers have missed, or to endorse it as is. Happy to take any questions. Thanks.
Graham.
Yeah, a note about Brockhole. Just is any impact measurable or worth noting in regard of the Keswick TIC closing? Obviously, it's not an asset, but there's a staffing reduction and a rental reduction there. Or is it too small to be bothering with on this report?
That is a good question. In relation to Keswick TIC, I mean, the operational bit, obviously being operational through the year, so the income and expenditure is reflected. You're right, we might look and go, oh, it's a bit different to last year because obviously it ceased trading partway through the year. I think at the end of January it actually closed. So there might be something in terms of queries around, oh, well, the performance looks a bit different, but as you rightly said, it's due to it kind of closing in year. In terms of the asset side, because it was a leased property, I don't think it'll have any impact, but it's a I think that's a good shout. So yes, we'll yeah.
Okay, thank you. Will?
Yeah, testing my knowledge of accounting, and I was just wondering in terms of Brockhole, is it what money it realises that will change, what will determine the change in value there, and also the reclassification of investment property? Is that just moving it from one category to another, or will that affect valuation too?
Yeah, I mean, in terms of Brockhole, like I say, we're sort of in the middle of considering whether there even is an impact, because from a classification point of view, it's currently it was an operational asset with us directly operating it. We don't think it's going to meet the criteria of an investment property because as an authority, we put so many conditions around its use. So a lot of it is still open to the public, and we heavily restricted what it could be used for. And obviously there's an awful lot of planning restrictions on what it could be used for. But we're going to work through the detail of that, and I'm sure GT will have an opinion and a lot of searching questions about any assumptions that we make. And sorry, what was the second part of your question, Bob?
Yeah, just the next bullet point in terms of reclassification of the woodland out of investment property to operational land.
Yes, sorry. So in changing the category, it does change the way it gets valued. So an investment property is essentially at open market value, give or take. Whereas if we put it as an operational property, it does slightly change the valuation basis. So it's value in its current use. In terms of the intricacies of how that might actually change the value, I am not even going to try and second guess, but that's the challenge that the in-house valuers are currently going through. So I guess what we're saying is it could change the value because it's sat at quite a high value now. It could materially change it. It might not change it at all. But yeah, it's just a flag. But that's a particularly significant asset where we're going to need to go through the process of reassessing it.
You will. No further questions. Okay. So the recommendation is for us to endorse the responses to external audit inquiries of management for 25-26 at Annex 1. Yeah. Thank you. Thank you. Okay, moving on to agenda item 13, Governance Committee Self-Assessment 25-26. Peter, what do we need to do to improve?
Yeah, so this is another kind of year-end paper and feeds into the annual governance statement. So a few years ago now, one of the recommendations out of value for money work was that governance committee should self-assess its effectiveness, at least on an annual basis, I guess, to make sure that we're all happy that the committee is sort of doing what it should be doing in an efficient and effective way. So hopefully CIPFA have developed a framework for this. So it's largely based on audit committees. So this is not quite an audit committee, it's sort of an audit committee plus standards. But for our purposes, does largely cover the same ground. Again, similar to the discussion on the annual governance statement, there's a sort of comprehensive framework that CIPFA have issued, which we as a smaller, sort of less complex authority, it covers everything and more that we would do. So they also issued a template self-assessment document, which we've used in prior years as a list of headings to, I guess, prompt responses in terms of, do we feel we're compliant in the key sort of areas around, is the terms of reference in the committee correct? Like, are we looking at the right things? Are the meetings run efficiently? Have you got proper admin support? Is the focus of the reviews correct? So all these kind of key elements. And again, in prior years, I think the main bit of feedback we got last year was to say, well, the committee is running effectively. Probably the main thing is around training and support, because it's acknowledged that quite a lot of the stuff that comes through this committee can be quite technical in nature, and just making sure that members were comfortable with what they were being asked of. So, for example, when we bring the accounting policies, are we asking members to understand them in detail, or is it more a case of this is part of the process to give members assurance that officers are doing the right things? So, explaining what the expectation is of members in the committee. So we have tried to implement that through the use of away hours in year. The feedback again this year was similar. So I think we'll continue using away hours to look at the forward plan. I think there was a specific point where review of the forward plan to flag specific items, because I think the sense was it's not always easy to preempt what the issues are going to be. So looking at the items that are coming up might help plan training, which I think is absolutely fair enough. A lot of the other answers probably are similar to what they were in the prior year. So like I say, we haven't had any major governance changes. So in terms of the elements of this self-assessment that are more around the arrangements and national park arrangements, as opposed to a local authority arrangements, which are most of the areas where the CIPFA template maybe didn't quite fit properly. Obviously, none of that's fundamentally changed. And again, I think that the feedback that we got was that people are generally content that the committee is operating effectively. Please keep doing the training, if I was going to summarise it. So again, we did put a call out for people to feedback, and thanks to everyone who did feedback. But I guess this is just a final opportunity. If anybody has any further comments or feedback about committee effectiveness, I'm happy to take any further feedback.
Mark?
I mean, I agree. I think we're just too small to bother with extra scrutiny committees and audit committees and all that kind of thing. Just roll it all into the one. If we need to ask a question, we can kind of get you here, really.
Yeah.
That's maybe more for the big authorities.
Yeah, Julie?
Yeah, so speaking as an ancient here, we used to have two separate committees. We used to have a standards committee and an audit committee, and members found that that was onerous for the volume of work that was coming through both committees. So it was decided to amalgamate them into two. It is possible to split them. What we did last time was we had effectively the committees listed for the same date, and one committee followed the other, which worked sometimes, but then didn't work on others, depending upon what volume of work was coming through from a standards point of view. The standards committee was listed first, so the independent persons could come and leave. And if there was only half an hour's worth of work, you then had half an hour that you had to wait so that you could then start your committee. And if there was more, then the other committee would run late. So hence the reason for doing that. Quite happy to look at that again if members wish, but I feel that this format works for the time being.
It's probably a good thing we're not calling for a standards committee, really.
Okay. Well, thank you.
Yeah, I'm quite content to agree that things are working fairly well at the moment. And I think the only thing is just to continue with the training and continue account development.
Thank you. And Graham?
Yeah, just mirroring Will's point there about training, really. I think it's something we need to keep up with. And it's mentioned several times here as well, so I fully concur with that.
Yeah. Yes, I agree. Tiffany?
Yes, thank you. At 15, the question about has an evaluation of knowledge, skills and training needs been carried out, etc. And I see we're partially compliant. One of the things that we also mentioned in the past, and I'm sort of we haven't actually taken it much further forward, but perhaps should do so because it would relate to it would be beneficial for other committees as well. Is the question of the skills audit. And also just thinking ahead when we recruit 2 new members to the authority, which we will need to start doing in the autumn. Again, if we do the skills audit, that will be helpful to know perhaps where we have actually got some gaps. And also in the case of this committee, whether we would be particularly looking for somebody who might have some additional skills that would be supportive of the committee. So it is something on my desk, I'm fully aware that we need to take forward.
Yeah, thank you. Yes, I agree. Okay, so the recommendation was for us to comment, which we have done, and to endorse the Governance Committee self-assessment for 25-26 at Annex 1. Can we endorse? Yes. Yes, thank you. Thank you very much. So the committee will consider the following resolution under section 100A(4) of the Local Government Act 1972. The public be excluded from the meeting for the following items. This is because exempt information, as defined in Schedule 12A of the Act, may be disclosed during discussions. Thank you.
I assume that's agreed.
Agreed? Yes, thank you.